Hello again, traders. Dwayne Shepherd here once again, your swing trading master, here to show you the results of yet another successful trade. Now, this and future trades that you're going to be seeing from me are going to be the ones that I'm executing on my funding account with Top Tier Trader. So this video is going to be showing you the main elements of that trade, and the full video is going to expand on many of the technical factors that supported this trade. Now, as you can see here, this was the setup on the 4-hour chart of the pound New Zealand dollar, where the market had formed this consolidation pattern on this time frame. Now, when the market provided a certain type of signal within this consolidation, which is a secret signal that I discovered about the market, this signal essentially showed me that the market was likely to start the breakout right away. So instead of waiting until the market actually breaks out above support, above resistance or below support to confirm the start of the breakout, this secret signal that I discovered allows me to enter the trade early and to take advantage of a much larger range of pips as part of the breakout. So that signal was provided by the market, and so the expectation was that the market was going to break out from the consolidation above resistance and head firstly towards this resistance target of 2.01939. So this was a trade target. Stop loss was set below the low of this candlestick formation. It could also have been set below the support boundary of the consolidation, and this was my pending order to enter the market at this lower price. The reason for this was that, as you know, when it comes to pending orders versus market orders, if the price is going to be too large and it's going to require too large of a stop loss, and it would ultimately violate your risk to reward ratio, then what you do, and what I did here, is to wait until the market pull back to that price that will allow me to meet those criteria. So this was a pending order for this trade set at this area here, and as you can see, the market eventually hit pullback to trigger the entry, take me into the trade, and before the market actually rallied as predicted to provide me with a trading gain of 131 pips, you can see here that the market actually pulled back a little to test the area where my stop loss was before it U-turned and eventually rallied and broke above the consolidation to hit the resistance target. So this was a great trade in terms of the large number of pips that were captured from this movement, taking advantage of the secret signal that predicts when consolidation breakouts are going to take place. And you could call this pullback at this area here. You could either call this me being very lucky that this pullback did not trigger my stop loss, or you could also look at it as confirmation that this area was actually a good and strong area to place your stop loss to protect against these type of temporary pullbacks. So the market rallied as predicted despite this temporary pullback, breaking above the resistance boundary and hitting the resistance target within 24 hours. So this was the entry candle, and we had 1, 2, 3, 4, 5, 6 candles, 6 4-hour candles, making it a trade that provided this strong trading gain, which was equivalent to 2% within just 24 hours. Now, in the full video that you're going to see for this trade, I'm going to be looking at how we go about identifying trend direction, identifying consolidation, as well as identifying the different types of consolidations that are formed in the currency market. The first of the secret signals that I've discovered over the last 2 years is going to be highlighted to show you how you can use this entry signal to predict the start of consolidation breakouts. So as part of that video, I'm going to be going through the main sections, the relevant sections of the trading manual, to show you how we go about identifying market direction, how we go about identifying the different types of consolidation patterns, uptrends, downtrends, as well as the various types of consolidations and the criteria that need to be met in order for our setup to be considered to be a consolidation setup. The second part of the video is then going to be speaking to how I go about identifying my trading target when it comes to consolidation breakouts, where I place my stop loss to protect against temporary reversals, which you saw an example here in this trade, as well as the holding period and the need to be disciplined to hold on to your trades until the trade has ended, or at least it has reached the end of the expected holding period. And to close off this second video, the second part of this video, I'll be speaking to a second signal that allows me to not only predict the start of consolidation breakouts, but to also predict the start of movements in other types of market scenarios. So I'll be using the candlestick signals once again to show you where we can place our stop loss, depending on the types of consolidation, depending on the type of candlestick signal that is given. And gonna be showing you how you can apply this, how you can apply the placement of, how you can decide on the best placement for your stop loss, whether you're trading a trend or whether you're trading a consolidation breakout. So the full video is available through my website, and you will see a description of the manual and the main elements and the technical factors and the strategies that are provided in the manual to allow you to better master candlestick formations on the daily and 4-hour chart, to be able to accurately and confidently identify high probability setups. So until next time, traders, happy trading and enjoy the currency market.